Hello friends. Today, let's look into Apollo Hospitals, India's biggest private healthcare chain running hospitals, clinics, pharmacies, and even health insurance. Here is what their numbers tells us. If we observe the sales, 10 years ago Apollo made 4,357 crores in sales. This year, that jumped to 22,550 crores. That is 16% growth every year on average over a decade. Solid and consistent. The last 5 years saw 14% yearly growth, and even the recent year grew 14%. What stands out is the steady upward climb, no major crashes, just consistent progress year after year. This is steady growth, not the wild swings you see in cyclical businesses. Now, let's look at expenses. Expenses grew from 3,681 crores to 19,352 crores this year. Material cost, medicines, equipment, supplies make up about 48 to 54% of expenses. Employee costs are significant at 12 to 17%. Hospitals need lots of doctors, nurses, and staff. Other costs like rent, utilities, and admin are 8 to 19%. Apollo keeps cost well managed as they scale up operations. Operating profit climbed from 676 crores to 3,199 crores now. The operating margin is 14%. So, for every 100 rupees in sales, 14 rupees is left after their direct cost. Margins have stayed steady between 10 to 16% over the years, showing consistent operational efficiency. Other income was 238 crores. This includes earnings from investments, insurance business, and other side operations. It's a helpful bonus on top of hospital operations. Interest costs are 450 crores per year, reflecting some borrowing for expansion. Depreciation: the cost of medical equipment and buildings wearing out is 795 crores annually, normal for a capital-intensive healthcare business. Let's look at net profit. Net profit grew from 315 crores 10 years ago to 1631 crores this year. That's 16% annual growth over a decade, matching sales growth perfectly. The recent years saw 52% profit jump, showing strong operational leverage. EPS rose from 22.77 rupees to 109.43 rupees this year, a fantastic reward for long-term shareholders. Return on equity is 18.4%. Return on capital employed is 16.6%. Both excellent for a healthcare company. Dividend payout is 13% of profits with a yield of 0.24%. Modest but regular income as most profits are reinvested for growth. So, Apollo shows steady growth. Sales and profits climb consistently year after year without major volatility. Healthcare demand is largely recession-proof and grows with India's aging population and rising income levels, giving Apollo predictable long-term growth. So, overall, Apollo Hospitals is a perfect example of steady, predictable growth in India's expanding healthcare sector. Rising demand for quality healthcare, consistent margins, growing profits faster than sales, and strong returns make it a reliable long-term compounder. If you want exposure to India's healthcare boom without the ups and downs of cyclical businesses, Apollo delivers consistent performance year after year. If this breakdown was useful, subscribe to Wealth Growth Club and tell me which company you want next.